Hello, everyone. Good morning, good afternoon, and of course, good evening to you, depending on whichever part of the world you are tuning in from. Well, it's a sunny morning out here, and I'm so excited and grateful for life to be with you here this morning. Now, before we kickstart the session, let's run through our daily routine and confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So, I would love to see your feedback, please. It really goes a long way for me to confirm that we are all on the same page here before we kickstart the session. Thank you very much as you do so. Okay, so I see a handful of comments here. SG3933483, good morning to you. Thank you very much. Wilma Saiz, Fajar77, thank you very much. Totolin, how are you doing today? 587888697, thank you very much. Hello, Carrie, how are you doing today? Polynesi 987, thank you. Easy 280490, thank you very much for that positive feedback. Atafaraz, I hope I pronounced that name correctly. Good morning to you and thank you very much for checking in here. All right, I will take this as a positive feedback that we are good to go this morning. Gachsa 29, thank you very much. And it's on this note, I welcome you once again to yet another promising edition on the X Trend Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we are going to be taking another fresh new look into the financial market using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action ahead of the New York sessions today. Well, since the beginning of the week, we have been monitoring four major financial assets, which includes the US Tech 100, the US All Spot, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And in fact, on all of these assets, we've done very well, as we really took advantage of the significant downtrend in the US dollar on Monday and Tuesday, giving us the privilege of scooping significant amounts of profits. And I really want to appreciate and congratulate everyone who had been part of that profitable journey. Well, the last 24 hours have come with some interesting development in the financial landscape as we're beginning to see how the US dollar was gaining some traction, some positive traction amidst its peers during the last 24 hours, which of course may likely be a retracement of that impulsive move we saw a couple of days ago. So we are going to be looking at the current market structures today to see how we are going to be positioning ourselves in such a way that we can capitalize on the next potential move. For those of you who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with us this morning. Well, I know you will be asking what this is all about. Well, as technical traders, we usually gather here every day to come together as a community and engage in follow ups and reviews of our current positions, our trading positions, of course, in preparation of the New York sessions. So this usually kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in during this time so that you don't miss out on the insights that we will be sharing during the session. My aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here in this community to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and of course encourage you to actively engage in the comment section. So with that being said here, let's dive right into the business. And as usual, the first thing we usually do is to check on the economic calendar. And of course, for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after these economic events. So on the economic calendar, we usually focus on high impact events from economic dockets that affects the assets on our watch list. And so far this week, based on the assets on our watch list, we have been focusing on both the United States and the United Kingdom economic dockets. Now, today, Thursday, November 16th, we do not have any high impact event to look out for. So what I did instead was to include the medium impactful event, which the reason why I've done this is simply because I want us to have keep tabs with the fundamental factors that are likely going to be affecting the market sentiments today. Now, on the list for today, it's filled with a lot of speeches, especially from the United States, and we have one from the United Kingdom economic docket. So we have Fed Cook. The Cook is going to be having a speech in. She's going to be having a speech in about 50 minutes from now, and she's a member of the Board of Governors of the Federal Reserve System. Then later on, about 3 to 4 hours from now, we are going to be listening to Loretta J. Mester, who is the President and CEO of the Federal Reserve Bank of Cleveland branch. Then later on, we are going to be seeing something from the U.S. Census Bureau, U.S. Department of Labor. Of course, that is the initial jobless claims, which of course will also be giving us an insight into the health situation of the labor sector in the United States. Then we also have the industrial production, which will give us an insight into the manufacturing and industrial sector of the United States, which is usually seen as a significant factor for the U.S. economy as well. But from the consensus we have here, economists are projecting a deficit of minus 0.3%, which is way below the previous month of September, which came in at 0.3% expansion. So it gives us a sign that things are not looking very rosy in that sector at this point in time. Then we also have some more speeches here from Williams, from Wallace, and then we also have one from the Bank of England, that's Ramsden. Ramsden is the Deputy Governor for Markets and Banking, and is also a member of the Monetary Policy Committee, the Financial Policy Committee, and of course the Prudential Regulation Committee. So he has a substantial role in these committees as well, and whatever he says today will also be everyone will be looking forward to it, as whatever he says will be of significant impact into the market. Then we also have Cook and Mester from the United States as well. Now, one important thing about these speeches is that the remarks they give today will provide insight into their central bank's outlook on the economy, potential policy shifts, and of course, interest rate changes or decisions. We are looking forward to another one in the month of December, so we want to see what this will be like. And this definitely will be impacting trading decisions and, of course, the market sentiment. So with the information we have gathered here on the economic calendar, as technical traders, we do know that the anticipation of this event usually influence the market sentiment, which we can see and of course reflect on the chart as price action. Now, talking about price action, let's run through the chart and let's look at things from a technical standpoint. So I see a lot of comments right here. Let me just say hello to you guys. Don Jin, good morning to you from Philippines. Glad to have you around with us. MPRA, good morning to you. Oh, Don Jin says it's the first time here. Very, very excited to have you around with us this morning. Glad to have you here. Haji 54796, good morning. Douglas from Uganda, good mornings to you. Ramix, good morning to you. Glad to have you guys around. I love the positive energy in the community today. Thank you very much, everyone. So with that being said here, let's dive right into the business. And the first asset we will be taking today is going to be the US Oil Spot. And in fact, since the beginning of this week, we've done very, very well on this asset. As you all remember that at the beginning of the week, we were doing more of buying this asset as we were able to scoop in over 240 pips during the first half of the week. And during yesterday's trading session, we anticipated some selling moves, which of course has also given us significant amounts of profits on this one. So for the sake of those who missed out on our earlier session, let's go through how the week started for us and what led to the decisions we made. So at the beginning of the week on the US Oil Spot, we did notice that price action was initially confined within the range of the $76.75 level and the $76.35 area to emphasize the level of indecision going on in the market at that point in time. And in addition to the range we have here was the ascending trend line we also spotted, which captured all the higher lows since last week Wednesday, as you will see here. And for the fact that price action was above the ascending trend line, you know, when we have ascending trend lines and price remains above them, we want to be looking out for patterns and structures that support the idea of buying that asset. And with this in mind, we positioned ourselves above the resistant line at the $76.75 area to capitalize on the first buy position for the week. And I did mention here on Monday that for those of us who missed out on this opportunity, that we should be looking forward to the breakout of the $77.50 area to add more positions. And we of course had more levels at the $78.43 area and of course the $78.63 area as we rode that bullish momentum all the way into the $79.50 level before the bearish momentum began in this market, taking us out of all the buy position. And of course, you know how we do it in this community. We move our stop losses and secure the current buy position. So in that regard, we must have been taken out with a reasonable amount of profit. Now, during our live session yesterday, we begin to notice that despite the strong bullish momentum that started this week, that there are chances that sellers could come in to this market. And one of the things we saw here that made us to start considering a selling opportunity, maybe in the short-term perspective, was the appearance of a reversal pattern in the form of a head and shoulder pattern. Now, we saw after the impulsive move that started this week, we saw our price action transition into the left shoulder. Then we saw the head, and then price action came back into the $78 area, transitioning into the right shoulder, and we had a beautiful head and shoulder pattern. And of course, you know how we do it in this community. Whenever we identify such reversal setups, the next thing we want to be doing is to mark out the neckline of that reversal pattern, which interestingly lines up with that $78 area. And one of the things we were looking out for was the breakdown to validate the reversal pattern, and we saw the retest of structure, and since that moment price action nosedive to the downside, giving us multiple entries. As you will remember, Yesterday, we said a breakdown of the $77.50 area will welcome more selling opportunities, and a further breakdown of the $76.75 level will be welcoming more sell positions. And in fact, on that sell positions we had yesterday, we were able to accumulate over 350 pips. And at this point in time, if you had moved your stop losses accordingly, you must have been taken out of all the sell positions at this point in time. So well done, and kudos to everyone who are taking advantage of this opportunity. Now, what are our plans as we get prepared for today's trading session, and what are we going to be thinking of? Are we going to continue selling, or are there chances that buyers can come in anytime soon? Well, if we look at the structure, basically we saw what happened during the Asian session as we saw price dropped into the $76 area, and throughout the Asian session at no point in time did we see price break down that area. So could this be an opportunity to start buying, or are we likely going to be seeing a breakthrough of the $76 level to incite a sell-off? Now, before I go into the details on the higher time frame, I want to share with you the fundamental factors behind the scenes that are likely going to be driving the sentiment in this market. Now, yesterday we witnessed a strong sell move, which can be attributed to the increase in U.S. crude stockpiles, which surged to 3.6 million barrels as against the previous one at 0.774 million, significantly surpassing the expected 1.793 million. Moreover, indications of reduced oil demand in China has further contributed to the prevailing pessimism surrounding oil prices going forward. Given the circumstances, the likelihood of a further downward movement is very, very likely. However, if we take into consideration the pledges made by the Saudis and the Russians about a couple of days ago as regards to cutting oil production by 1.2 million barrels per day, this could artificially increase the demand in oil. So now let's go into the daily time frame here. Let's look at things from an holistic standpoint to see how we intend to position ourselves for the next move. Now, to do this, we will scale up into the daily time frame, as this was where we started our analysis for this week. Now, on the daily time frame, this is what we saw at the beginning of the week. We had a couple of levels on this chart, which we said we will be using to guide our trading decisions. Now, the first one here is the $75 area, which was duly marked after considering the nature of price action since the month of July. And one prominent thing about the $75 area is how it had been a strong buying niche since price climbed above the structure, and the attempt by sellers to break through here despite the strong bearish momentum from last week's trading session was duly negated by the buyers, as we saw buy pressure resume around that area. So the $75 level is considered to be a demand zone based on what we are seeing here. Then the other one we have here is the $80 area, which is serving as the key level of this current market condition. And of course, we saw how price action did break down the $80 level during the last week's trading session. And from a technical standpoint, we do expect that price may come back, retest the structure to incite a downtrend move. However, it is not all the time that price action does this, as it could still incite a reversal pattern, as you will see here. If price is unable to break through the previous low at the $75 area and along the line forms a higher low, then we might likely be seeing a reversal setup, maybe in the form of a double bottom structure to incite an uptrend move. Now, with the information we have gathered here on the daily time frame, it's quite clear that we are at a crucial juncture in this market where we need to understand the psychology behind the price movement around this area. Now, for us to have a better perspective into what is going on here, we will need to scale down into a lower time frame. Now, on the 4 hours time frame, we had a beautiful structure here after considering the nature of price action in the last 3 to 4 weeks. Now, the first thing you will observe here is the descending trend line. Of course, you will see price had consistently found lower highs, leading to the breakdown of that $80 area. Now, something interesting happened during last week trading session, as we saw here that as soon as price got into that $75 area, we begin to notice buy pressure resume around this area. If we take a further dissection of the structure, you will see that price action appeared to transition into a double bottom structure after failing to break through the $75 area for the second time. And with that scenario in mind, we had a neckline for this reversal pattern where we were waiting for the breakout retest of the neckline to validate this reversal setup. And look at what we had here. We saw price breakout structure, and it appears price has come back to retest this level. And since the retest, we have been noticing some buy pressure in the last 8 hours. Now, in this regard, will this be a platform, a new platform for another wave of bullish momentum? Well, we are going to scale down into the 1 hour time frame to see how market participants are actually reacting to the $76 area, as this will be giving us an insight into how we are going to be managing our positions for today. Now, in that regard, we'll scale down into the 1 hour time frame, where we can see price is currently trading around a range at this point in time. Now, if we take a closer look and zoom into that $76 area, you will see that since the early hours of today during the Asian session, we saw price has been oscillating or confined, let me use that word, between the $76.50 level and the $76 area, which emphasize the level of uncertainty at this point in time. And of course, you know how we use our flag channels in this community, especially when we start seeing indecisive phase such as this. We want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, in addition to this range where price is confined within, is the fact that in the last 2 days, price action has been on a bearish momentum. And if we connect the series of lower highs here, we have a beautiful descending trend line that we will be using to guide our trading decisions for today. And of course, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we feel comfortable in a sell position. But if price at any point in time breaks out or breaches the descending trend line, then this will be a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, if you look at what has been going on here in the last 2 to 3 hours, you could see that it appears that price action has broken out of that descending trend line for the first time in the last 36 hours. Now, with the breakout of that trend line, it appears price is breaking out of the resistance line of that range again at the $76.50 level, though we can't say the breakout of the resistance line is valid at this point in time, as the current candle still has about 30 minutes for it to close. Not until this candle close can we truly say that we already have a breakout of the $76.50 level. However, for me, I already had a buy stop order which has been triggered above the $76.50 level. Of course, you know why I did that, because we are profitable so far this week, so I can still afford to leverage on the profit we had. So right now on the US All Spot, we will be maintaining a bullish bias anywhere above the $76.50 level. So if we are buying right now, anywhere above the $76.50 area seems much reasonable to buy the US All Spot. And if price continues to climb, we have the $76.75 level, we have the $77.50 area, we also have the $78 area, all of which breakout retest of the structures will be welcoming more buy positions. Now, in as much as we're buying here, please note that you do want to have your stop losses in place. Very, very important. Every decision we make in the financial market is more or less an educated guess until price action hits your TP target. Now, with the situation we have here, it will be very, very reasonable to have your stop loss right below the support line, which is just right below the descending trend line here, which will be dovetailing to between 50 to 55 pips thereabout for this buy position. And one thing we also want to consider here is the likelihood of price action coming back to retest the structure in anticipation of an uptrend move. So let's ensure that we have enough breathing space for price action to move around on this bullish momentum. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community. We also want to capture the potentials the sellers also have. Of course, in the last 24-36 hours, it has been more of a bearish momentum, and we don't know if this momentum has finally ended. Now, if we are going to be considering selling the US All Spot today, what is it that we want to see on this chart that will make us feel comfortable and confident to negate the idea of buying? Now, if I want to sell, I would rather want to see price break down, retest the $76 area before jumping into a sell position. A breakdown of the $76 area would, one, have broken down the lowest point of price action for this week, and secondly, it will be back within the seller's territory, which is just right below the descending trend line. So let's see how the market will play out from this point current structure. Our center of focus for today is basically between the $76.50 level and the $76 area, where depending on the direction of the breakout here will give us a clue into where price is likely going for today. So I encourage you to mark out these levels on your chart, as you will be needing them as a guiding light for your independent trading decisions during the New York session today. So if you have any questions whatsoever as regards to my current setup or my explanations, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next assets on our watch list. All right. So I see Umbak Forever. Good morning, Marketer. Good morning, Survivor Agal. Good morning to you. AJ9230. Good morning. And Samsad82. Douglas. Good morning to you. Okay, Douglas says it's his first time. Good morning to you, and glad to have you around with us. And you want to know more about this trade, well, I would encourage you to listen through the session, and the more time you spend with us, the better you will get to understand our analytical approach in this community. So take your time, follow through with the session, and be part of the subsequent editions. All right, okay, Moton 9191 Dong Trong Man, good morning to you guys. Glad to have you around with us. So with that being said, let's move on. And in the absence of no questions, let's move on to the next assets on our watch list. So the next asset on our watch list for today is the USTech100, and in fact we had a phenomenal week so far, as we were buying this asset at the beginning of the week, scoping over 350 pips move before this bearish momentum began here. Now let's quickly run through what has really happened since the beginning of this week and what led to the decisions we made. Well, during the first 36 hours of the week, we were noticing that price was confined within a range That was between the 15,530 and the 15,445 level to emphasize the level of indecision going on in this particular market. And of course, you know how we do it. Whenever price action falls into a range like this, we have no other choice than to exercise patience and wait for either the breakdown of the range to give us an opportunity to sell, or the breakout of the range to give us an opportunity to buy. Now, coupled with the fact that we had a range identified, we also saw how price action was finding higher lows within the range, giving us clues that despite the fact that price is within a range, we are seeing signs that buyers are gradually gaining momentum, making us feel comfortable looking out for buying opportunities at the breakout of the 15,530. And of course, we saw price break out of that structure with an engulfing bullish candle, taking us all the way into the 15,930 area, scoping over 350 pips on that single move. And for those of us who took advantage of that opportunity, well done and kudos to you for being on standby. Now, during our live session yesterday, we anticipated that if price will continue to the upside, then a breakout of the 15,930 will be welcoming more buy position. And you know how we do it in this community. There are two ways to which we can capitalize on breakouts of entry levels. One of them is for those who have been profitable so far this week, who can afford to risk and leverage on some of their profits by placing a buy stop order above the structure. And the other one are those who are yet to take advantage of any opportunity, so they need to exercise patience and wait for a breakout and retest before they can jump into any position. Now, we saw the situation here, and coupled with the ascending trend lines we marked out here, we positioned ourselves for the New York session. And one of the things we said here is that as long as price remains above the ascending trend line, we look out for buying opportunities. But at any point in time this ascending trend line is broken and retested, we do want to be selling. Now look at what happened a couple of hours into the New York session. Price broke down the ascending trend line, retested the structure, and boom, price went all the way to the downside, giving us an opportunity to join a sell move. And for those of you who are still in a sell position right now, you will be running with about 70 pips in profit at this point in time. And congrats to everyone who took advantage of this move. Now, with the way things are going at this juncture, I will be advising you to move your stop losses accordingly, and let's lock and secure this current position as we're beginning to notice some buy pressure resume in this particular market. And if you would ask me, I will be suggesting that anywhere above the 15,815 area and the 15,850 seems most appropriate to lock in the sell positions, as buyers may likely come in at any point in time. Now, with a well-secured position at this juncture, what is my next line of action? What do we want to be doing today to guide our trading decisions going forward? Well, before we move into the details here, let's scale up into the higher time frame to see how we are going to have an holistic perspective into what is going on in the market, and hereby giving us an insight into how to position for the next move. Now, in that regard, let's scale up into the daily time frame. And on the daily time frame, for those of you who have been with me for a while now, you will be familiar with the setup, as you will see here that since the beginning of this year, price action has been very, very bullish. And in that regard, we had a couple of ascending trend line to which supported the idea of this bullish momentum. However, something interesting happened like 3 to 4 weeks ago when we saw price break down the ascending trend line for the first time. And one of the things we were looking at when price broke down the ascending trend line was the chances that price may come back, retest to incite a downtrend move, but that was not what happened. Price just broke out with another engulfing candle to push price all the way to the upside, breaking out of our key level along the way. Now, with the situation we had here on the daily time frame, if you remember vividly during our live session, we said that price action is gradually approaching a critical zone at the 15,930, which happens to be the highest point price action has been for this year. We saw what happened here in the month of July. As soon as price got into that area, we saw some selling niche push price to the downside, and it appears that price action is beginning to find selling pressure around this area again. And in fact, if you look at yesterday's candle, you can see that it closed in the form of a shooting star candle, which technically tells us that sellers are very present around this area. Now, the question going into today's trading session is this: are we going to be seeing this continued selling pressure persist in such a way that price may come back and retest the structure that was broken on the last trading day of last week to incite an uptrend move, or maybe push to the downside to incite a further sell-off? Or are we going to be having a situation where the 15,930 will be broken, becoming a platform for new highs in this particular market? So what we are going to be doing at this juncture is to try to see what has been going on here in the last 24 to 30 hours in this market, to see how we will be positioning ourselves for today's trading session. And for us to see this clearly, we would like to scale down into the 1 hour time frame. Now, on the 1 hour time frame, you will see that after price tested that high, I would like to bring this in a little bit so that it will reflect on the charts. Okay, so after price tested the 15,930, we saw a drop into this area, and throughout the Asian session, we saw how sellers have found it difficult to break through the 15,770, and the appearance of buy pressure around this area could be inciting some buying opportunities at this point. Now, if we are going to be capitalizing on this one, I want to be seeing price action take out all the sellers around the 15,820. So I will just label this one right here and encourage you to also do the same, as we will be needing it to guide any uptrend situation here. So we have 15,820 level duly marked out on our chart. So right now, what we want to be seeing here is, look at what has happened here since price broke down the structure during the later part of the New York session. We saw during the Asian session how the 15,820 had been a strong selling niche. Now, for me to consider buying here, I would like to see price take out the 15,820, retest of structure to join an uptrend move here. So that is the only condition that will make me consider buying the USTech100. And if price continues to climb high, then a breakout of a 15,870 will be welcoming more buy position. A further breakout of 15,930 will welcome additional buy positions here. However, in as much as we're looking out for buying opportunities here, chances that sellers could still push price to the downside is still very valid. Now, if we consider the impulsive move that started at the beginning of the week, you know that whenever price action moves significantly like this at a particular point in time, we are likely going to be seeing some profit-taking activities, as those who had bought at a very cheap price who want to be taking some profit off the chart, and this would reflect on the chart as a retracement. How far will the retracement phase go? We don't know, but we have structures that we can use to guide our decisions. And if we look at this, we have something like this. So we have this ascending trend line here marked out. So let's see if the market will respect that trend line. So if price breaks down the 15,770, then we might likely be seeing a counter trend, maybe back into the trend line, which will be dovetailing to about 140 pips thereabouts. So if you're a counter trend trader, you might want to take advantage of this move and run that momentum all the way into that structure. Now, depending on how price reacts to this ascending trend line, will give us an insight into how we are going to be going from there. If price finds buy pressure, then we want to get ready for the second leg of the bullish momentum that started this week. But if price breaks down the structure, then we do want to be thinking of adding more sell positions to our existing trade. So that is what we are going to be looking at on the US Tech 100 for today. So I do hope I made myself very, very clear. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we move on to the next asset on our watch list. I see your comment here, MPRA. Good morning to you. And you are asking that since the trading level is between 75 and 76, it's advisable to buy or sell today. Okay, so I want to assume you are talking about the US oil spot, right? So let's look at what you're saying here. I think I laid emphasis on that clearly the other time I spoke about it, but no worries. I will just quickly run through that again. So zooming into the structure, I told you that price is currently trading between the $76.50 level and the $76 area, right? And I said here that whenever we have a range, what we usually do in this community is to exercise patience and wait for a signal to happen before we jump into any position. And the signals we are looking forward to is either price breaks down, retest the structure to give us an opportunity to sell, that is break down, retest the $76 level, then that will welcome selling opportunities, or we wait for price breakout and retest the $76.50 area to give us an opportunity to buy. So it's a very, very simple setup. Let's wait and see breakout retest of the $76.50 level to buy, or the breakdown of the $76 level to sell. So that is what we are looking at. It's a very simple setup. Just mark out this level and wait for confirmations to join any direction price action breaks out to. So that is what I said here, and I hope you get it clearly right now. And I see your comment, NFT Italy. Good morning, Jenny Ho. Good morning to you, Strikant. Good morning to you guys. All right. So in the absence of no questions, okay, Roga543, thank you for checking in. So in the absence of no questions, let's move on to the next asset on our watch list. So the next asset we are going to be looking at for today is going to be the GBPUSD. And in fact, we did very, very well on the GBPUSD so far this week. In fact, I will say that the GBPUSD is the most profitable assets amongst the assets on our watch list for this week, as we scooped over 1,300 pips on the first buy positions we took at the beginning of the week. Now, before we go into the details here, and for the sake of those who missed out on our earlier session, so that you can have a background knowledge of where we are coming from, let's run through how the week started for us here in this community. Now, at the beginning of the week, we saw how price was initially confined within the 1.22375 and the 1.22225 level, which emphasized the uncertainty that was going on in the market at the beginning of the week. And of course, we said here that if price breaks above the resistance line, we look out for buying opportunity, and if price breaks down the support line, we look out for selling opportunity. And in fact, at no point in time did we see any sign of sellers trying to make any attempt to break through the support line, hereby totally negating the idea of considering any selling potential here. Now we saw price break out of the resistance line, and in fact those who missed out on that opportunity, the market was so nice as it came back, retested the structure multiple times, and since that moment we have been buying the GBPUSD. And remember that we had multiple entries, as we had the 1.22535 level marked out, looking out for more buy positions. We also had the 1.22710. We added one more at the 1.22805, and then finally on Tuesday this one was broken with that immensely engulfing bullish candle as price moved all the way into the 1.25050 area. So it was a phenomenal first half of the week for us all in this community on the GBPUSD, and for those who took advantage of these opportunities, well done to you. Now, during our live session yesterday, we begin to notice the diminishing in the momentum of the buyers as we begin to see price transition into a reversal pattern in the form of a double top structure, as price was unable to break out of the previous high. And with our neckline situated at the 1.24800 level, we decided to consider selling at the breakdown retest of this structure, which was exactly what happened. A couple of hours into the New York session, we saw price come back to retest, and since that moment we joined that bearish move to the downside, scooping another I think we had another 850 pips move on this bearish momentum. And one of the things we said here yesterday is, how far will this bearish momentum go? And remember that we are still on the bullish momentum here, considering the impulsive move we witnessed at the beginning of the week, and we don't know when the retracement phase will end, but I'm of the opinion that structures will give us signs of how we are going to be managing that. Now, for those of you who still have a sell position at this juncture, you definitely want to be moving your stop losses, protect these positions, as we're beginning to notice the appearance of buy pressure at this point in time. Now, with a well-secured position at this juncture, it is very important to note here that the bearish momentum we are seeing in this market may likely be a retracement of the strong bullish movement that commenced earlier this week. Now, the question revolves around the extent of this retracement before the potential resurgence of bullish momentum will happen. It is important to note that the upside may be limited due to the increasing consensus that the Bank of England is likely to initiate interest rate cuts, which is of course supported by the softer UK consumer inflation figures that we saw yesterday. Now, in that regard, we need to be very, very careful how long the structure, as anything can happen around this area. Now, how do we intend to capitalize on the next move? But before we go here, let me scale up into the 4 hours time frame. I really do not have much time here, and let's look at what is going on here. Now, on the 4 hours time frame, what we did was to take into consideration the nature of price action in the last three weeks, I think. And we had a beautiful setup identified at the beginning of the week, where we saw this impulsive move from last week's trading session, and we considered this move here as a retracement of that impulse leg, which catapulted into this impulsive move. Now that price action is retracing right now, as the retracement ended, as it ended, or are we going to see a situation where price will still get into this trend line before it moves to the upside? Now, another thing I would like to call our attention to here is the structure. So if I bring out my line chart, you will see that this level here at the 1.24, another psychological level, was broken during the early part of this week. So we had the 1.24 here, which we duly want to mark out on our charts. 1.2400 level. I will show you the reason why it is very important. So okay, so let's see here, bring back our candle chart and look at what we have here. So at the beginning of this week, we saw selling pressure around this area. Then we saw price break out the structure. And after price breakout structures like this, we expect that we might be seeing some price coming back to retest to incite an uptrend move. And right now, in the last 12 hours, price action has been finding buy pressure around this area, resulting into a consolidation phase, giving us an insight into how crucial this juncture is at this point in time. Now, the question going into today's trading session is, will price action break down this 1.24 area to incite a sell-off, or are we going to see this level become a new platform for new highs? Now, if we scale down into the 1 hour time frame, we will begin to see things more clearly into how price has been reacting to the 1.24 area. Now, if you look at the structure closely, you will see how I want to take this one out. I want to take this one out from here so that it doesn't mess up the structure of our chart. So we go back into the 1 hour time frame and look at what we have here. Since the early hours of today, during the Asian session, we can see our price has been oscillating within a range that is between the 1.241 and the 1.238, just right around that level we identified on the higher time frame, which further gives us an insight into the level of indecision in this particular market. And of course, you know how we use this kind of range. Whenever we spot them, we want to exercise patience and wait for either the breakout or breakdown of the range to give us an opportunity to trade. Now, in addition to that range we have here is the series of lower highs, which for me is considered to be the retracement of that impulsive move, which we are yet to phantom when it will end. So we have a couple of descending trend lines here. We have the first one here and I have the major one right here. Now, for me to consider buying the GBPUSD, I would like to see price take out the descending trend line, break it to the upside, and then I want to start considering buying this asset. Now, one thing about this trend line is the fact that it also shares a confluence with the resistant line of that range at the 1.24100 area. So what I did here was to place a buy stop order above the 1.241 with the hopes that price will continue to the upside, putting my stop loss anywhere around this area. That's about 25 to 30 pips stop loss, and let's see how the market will play out from here. The idea behind this is that if price will break out of that descending trend line, then we will have been at the end of the retracement move, and price may likely want to begin the second wave of the bullish momentum that started on Monday. Now, in as much as we're looking out for buying opportunities above the 1.241, if it so happens that price action drops below the 1.238 and retests it to the downside, I'm of the opinion we are back within the seller's territory and that the retracement phase will hereby continue. So if that happens, we are below the 1.238 to join a sell move, and let's ensure that we move our stop loss as soon as price gets into this major ascending trend line, as depending on how price reacts to the trend line will now determine if we are going to be adding more sell position or getting ready for that second wave of bullish momentum. So these are my views here on the GBPUSD for today. So our center of focus is basically between the 1.241 and the 1.238 area. So let's exercise patience and wait for the structures to mature before we jump into any position. Now, there is a caveat here. There are two ways to which we can capitalize on the breakout of the structure. Now, for those of us who are already profitable this week, you can have your buy stop order above the 1.241, and if it doesn't work out, you know that you're only risking some of the profits you had made this week. But if you are new with us, then I would encourage you to exercise patience and wait for confirmations like a retest of structure on the lower time frame before joining that uptrend situation. So same thing also with the support line at the 1.238 area. So if you have any questions whatsoever as regards to the current setup, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds. If you have any questions, feel free to let me know, and you can take that time also to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading decisions today. Okay, so hello to you, 643-93353. All right, so in the absence of no questions, I'll take this as a confirmation that we are good to go, and in that regard, we move on to the last asset on our watch list. So the last asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And we've done very well on the gold assets since the beginning of the week. Remember that we have been buying this asset, and not until yesterday we noticed price breaking down to give us some selling opportunities in that regard. And for those of us who have been part of this profitable journey, well done and kudos to you for being on standby to capitalize on that move. Now, as regards to the sell positions we took yesterday at the breakdown of the 1970, at this point in time, all sell positions have been closed as gold has attracted some deep buying activities during the Asian sessions today, indicating a potential halt to its retracement. Moreover, it is the increasing consensus that the Federal Reserve has completed its interest rate hikes may provide further backing for these assets. And also the geopolitical tensions in the Middle East as well usually favor safe haven assets such as the gold, and in that regard I still maintain a bullish bias here unless certain structures are broken to the downside. So we will be looking at that in a moment. But before we go into the details, let's run through how the week started for us in this community on the XAUUSD and how we capitalize on that bullish move. Now, at the beginning of the week, we had an ascending trend line which was marked out right here. And then coupled with the ascending trend line was the fact that price action was caught within a range that was between the 1941.50 and the 1934 area to emphasize the level of indecision there. Now, if you were with us during the live session on Monday, you will recall that we said that if price action breaks down the trend line and the 1934, a retest of structure will be all we need before we can sell, which of course never happened, hereby negating the idea of selling. And with a buy stop order above the $1941.50 level, we capitalized on our first buy position for the week. And since then, we have been buying this asset. And remember, we had multiple entries such as the 1945, the 1948, and of course the 1949 as at the beginning of the week to maximize the potential of this bullish move all the way into the 1975 area. Now, during our live session yesterday, we saw we had a structure marked out on our chart here where we said we will be looking out for more buying opportunities if price goes on to break out of that area around the 1972 or 73 area at the beginning of the New York session yesterday, and that the only condition that will make us sell is for price to break down, retest the 1970 level. Now, this sell here will have favored those who have been profitable so far this week, as those who have been profitable will have a sell stop order below the 1970. And for those who are not joining us for the first time yesterday, they might have missed out on this one. But if you had risked it, well done to you, as we saw price move about 120 pips move before this buy pressure began here. And by this time, you should be out of all but sell positions, as you must have moved your stop losses accordingly. So well done, guys, for doing that. And personally, at this point in time, I already have a buy position triggered at the 1964, and I will be sharing with you in detail why I decided to buy. Now, the first thing I observed here on the 1 hour time frame was the fact that price action, the market sentiment is still looking very, very bullish. Now, the first thing I saw here was this ascending trend line after connecting the series of higher lows. And in fact, if you look at how we use our ascending trend lines in this community, as long as price remains above the ascending trend line, we'll continue to look out for patterns and structures that supports the idea of buying that asset. Now, in addition to that ascending trend line, I also connected the series of higher highs, giving me another trend line which will be serving as the resistant line of that channel. So we have an ascending channel here, and as long as price remains within this ascending channel, we remain bullish on this asset. Now, with the way things are going right now, and after noticing the continued buy pressure around the $1,957.50 area, as you will see that since Tuesday's trading session, when price broke above this level, you will see how sellers have struggled to break through that level. At every point in time they try to do so, buyers come in to negate all their attempts. The same thing also happened during the Asian session, as we saw another sharp rejection of both the support line and the $1,957.50 area to further buttress the strength of the buyers in this particular market. Then I also saw something like a double bottom structure price like this, and had my neckline situated along the $1,964 area, and I was looking forward to the breakout of that structure to join that uptrend move, which had already happened at this point in time. And if you are taking advantage of that move, well done to you. But for those of you who had missed out on that opportunity, it's okay. Let's see if the market will come back and retest the 1964, or even come to as close to the 1000, to the ascending trend line, where the appearance of buy pressure, in fact what we want to be seeing, has signs that sellers are finding it difficult to break through the ascending trend line. Then that will give us an opportunity to join an uptrend move. And in fact, we have multiple levels that we will be using to guide our trading buying decisions for today. So a breakout of the 1970 and the 1975 level will be welcoming more buy positions on this one. So on the XAUUSD, I remain very, very bullish on this asset. However, if at any point in time today we see a situation where price drops and break down the 1957 area, remember how crucial we said this area is for the buyers, as you will see that sellers have been finding it difficult to break through that zone. Now, if it so happens today that price breaks down the $1957.50 area, a retest of structure is going to be a beautiful confirmation that buyers are no longer strong around that area, and then we want to be part of a bearish move to the downside. Now, there is something here I would also like us to take note of, especially if we look at the distance between the 1964 and the 1957 area, which is about 70 pips thereabouts. So I'm considering how I can actually sell before the breakdown of that line happens, so that I can maximize the potential of that bearish move. Now, when I was looking at the structure, I saw here that the support line of that ascending channel could be of help in guiding us to sell early enough. Now, if price action at any point in time breaks down both the 1964 and that ascending trend line here, then the inability of buyers to be able to break back above the trend line would be a beautiful signal to join a bearish move. Then we can have a sell stop order below the 1957 to ride the momentum to the downside. So this is how we are going to be managing our positions on the XAUUSD today. So if price ever drops below that descending chart, so the ascending channel, which I doubt will happen, but if it does happen, we want to capitalize on that move. And also remember that we have an ascending trend line here, where depending on how price reacts to the trend line around the 1950 will decide if we are going to be getting ready for the second leg of the bullish momentum, or the breakdown of the structure will welcome more selling opportunities. So let's see how this will play out in the next couple of hours, and by tomorrow we shall be back here again to review how well these assets have been doing. In fact, I'm already way out of time here, but I do hope that we all understand what I just said so far. But if you still have questions, feel free to let me know in the comment section. So while I wait for your answers, I will just round up for the session today. And so for today's trading session, we were able to attend to 4 major assets, which includes the USOILSPOT, the USTech100, the GBPUSD, and finally the XAUUSD, which is popularly known as the gold spot. And in fact, we were able to identify very simple setups using fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. So I do hope you marked out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. And for those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you do, hope to see you same time tomorrow. And I assure you, the more time you spend with us in this community, the better you become in understanding our analytical approach, and eventually be able to use the information gathered in this community to make your own independent trading decisions. So on this note, I want to wish us all the best of luck, and always remember that for every trade you make, always have a consistent and defined risk management strategy for every trade you make. Every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So on this note, I wish you best of luck today, and I look forward to seeing you same time tomorrow, same time, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and of course, get prepared for tomorrow's trading session. Do have a wonderful evening, everyone. Bye-bye.